Hey traders, this is Blake Morrow with Traders Summit. With me again is Mr. Michael Brown. He is the head of market intelligence with Caxton FX. Good to see you. How are you?
Hello, Blake. I'm very well. How are you? Good to be back.
It's great to have you back, especially just ahead of the holidays. I know we're all excited to get on with the holiday festivities. I'm sure you are too.
Aren't we all? It's been a long year, and I think we're all looking forward to taking a break over the next fortnight or so.
Yeah, yes, and you know, with that being said, I know we're ready to get this year past us, but I'm actually, as an FX, a very active FX trader and participant, I'm excited for 2022 because of the potential volatility in the currency market. Do you share that same enthusiasm that I do?
Yeah, definitely. And I think actually looking ahead to 2022, my kind of hope and expectation is we get back to a little bit more normality in terms of what drives the markets. And we're not thinking about, COVID cases or the pace of vaccinations or whatever. And we actually start looking again at monetary policy and relative shifts in policy and relative economic growth, and where does inflation head in various economies, where's it persistent, where does it fade, and price pressures are temporary. And I think as all of those things pan out and as market participants guess and second guess each other, there's definitely the potential for volatility to get elevated once more next year.
Yeah, I'm hoping that. So I've been telling our traders here over the last several months that 2022 is going to be the year that you want to be involved in the currency market. And I can't think of a better person to help navigate that than you. So
thank you very much.
with that being said, we are on the cusp of a release from the Bank of England, the European Central Bank. We have the Bank of Japan still, as we wrap up the week. We have the Norges Bank. We have Banxico. We have a few central banks that are really coming up with big decisions. So can we talk about some of the ones that are on your side of the pond? Let's start with the Bank of England, where you live. How do you feel about the Bank of England?
Yeah, definitely. Well, 5 minutes down the road from where I am here. Yeah, the Bank of England are in a really difficult spot at the moment, but it's actually largely self-inflicted that they find themselves in this spot. Let's make that clear, because they didn't pull the trigger on a rate hike in November when they pretty much told everyone they were going to, and they probably should have done, and in the end they bottled it. So we're now in a situation here in the UK where you've got a very tight labour market. Employment is above where it was pre-pandemic, and unemployment is down at 4.2%. And importantly, this data covers the period after the furlough scheme expired. So this is a true indication of what's going on in the jobs market. You've now got inflation running at a 10-year high. CPI came out on Wednesday at 5.1% year on year. The core number is accelerating north of 4%. And if you look at what's going on at the factory gate, PPI is up at about 14%. So there's plenty more price pressures being stored up in the pipeline, ready to come into the new year. So CPI could easily be 6, maybe even 7% at the end of Q1.
Oh boy.
But then on the flip side of that, you've got the emergence of the Omicron variant of COVID. The UK has now gone to what the government are calling Plan B in terms of our public health response. So people being asked to work from home if they can, wear masks, limit interactions, etc. So you've got, on the one side, a very tight labour market. Inflation is here. It's going to accelerate. Wage pressures are building, and that's obviously going to see inflation accelerate more. But then I think policymakers are going to look more towards what's going on with COVID, the risks that the Omicron variant poses to growth. And I just cannot see them hiking rates this Thursday. And I think liftoff is going to have to wait until February of 2022, which is arguably too late. But given the emergence of what's going on with COVID, I don't think they've got much choice but to wait a little bit longer.
That's going to be interesting, because where the sterling really found some support technically this last week was at a 38% Fibonacci retracement of the whole COVID move, the lows to the highs, post-COVID, move. And that comes in right around 130, let's say 130, 150, 130, 160, depending on, what feeds you're using. But,
yeah.
I sit there and I look at the sterling, and, based on what you're saying, that would be a pretty big disappointment for the market, I would think. And that could really put the sterling at risk for lower prices if they do not deliver once again, right?
Yeah, and I think the bigger risk for sterling, from my point of view at least, is that not just the bank are going to disappoint, and not pull the trigger this week, but the fact that the market still prices in about 100 basis points worth of hikes, the last time I checked, between now and December of 2022. And I just find it really hard to imagine the bank actually delivering that degree of policy tightening. So all of that needs to come out at some point. And as and when it does come out, as and when the market realizes that this is unlikely to happen, that's obviously going to be a headwind to the pound. And as the market prices out tightening in the UK, you're going to have the market pricing in an ever increasingly hawkish Fed as we move through the early part of next year and the taper wraps up and they look to begin raising rates. And that divergence, logic would dictate, all else being equal, is going to see cable move to the downside and perhaps quite significantly.
Wow. All right. Well, that's a pretty big, that's something to really think about as we move into 2022. I want to turn your attention over to the central bank of the ECB that, pigs were flying last time that we discussed them potentially raising rates at some point in the, forever off future. But how do you feel about the ECB as we're faced with an ECB decision this week?
Well, I think the ECB is actually a pretty interesting one, and it's not often that I would use that term to describe the ECB, I must admit. I think that the reason why it's interesting is twofold. One is that everyone expected, probably 6 weeks ago, maybe even slightly less than that in December we would hear some clarity from policymakers on what they're going to do with bond buying after March 2022, because that's when the PEP, the Pandemic Emergency Purchase Program, that's when that expires. How are they going to continue providing a significant amount of support to the Eurozone economy, keeping conditions easy, keeping spreads nice and tight, et cetera, et cetera. But I think the emergence of the Omicron variant, again, as it has with the Bank of England, where it's kind of put the brakes on any prospect of policy tightening, I think with the ECB, it's really diminished the chances that we are going to get a firm decision on the future of asset purchases this week. And I guess that's probably now going to have to wait until the January meeting. So we might get a few hints that they're going to wrap up the PEP and boost the asset purchase program with a little bit more flexibility to try and take the place of the PEP. But whether we get any firm decisions on that this week, I think is unlikely. But then as for interest rates, I mean, my comment when we spoke last still stands. There is more chance of pigs flying than the ECB hiking rates in the next 2 or 3 years. And that's going to be shown by the medium-term inflation forecast, which in both 2023 and our first look at 2024 is going to be below the 2% target. And for as long as the ECB continue to think that inflation is going to be this hump-shaped profile where we get back down below 2% in 2023, they're not even going to talk about rate hikes. Then they're going to do all they can to avoid sounding even slightly hawkish. And again, it's the same situation where the market prices in hikes from the ECB next year. They're not going to happen. Hikes are going to happen in the US. The market's got a price out tightening in the Eurozone. So you'd look for downside in euro dollar as you would for cable.
Okay, well, first, I guess going into, what they're going to do with PEP, I hope we don't have to learn another acronym of another self-created type of scheme that they might use.
I certainly hope not, but with that lot in Frankfurt, you can never be too sure, I guess.
All right. Well, based on what you just said about the Bank of England and both the Bank of England and the European Central Bank, it's excuse me. It sounds to me that you're very bullish the dollar, but what could dethrone the dollar? I mean, moving into 2022, because based on what you're saying here, I'm starting to think, oh man, maybe we should start thinking about dollar index 100 or something like that. Is there something that in the future that you see that could really disrupt the bullishness of the dollar as a single currency?
Yeah, I think the real kind of big risk to the dollar next year is if the Fed underdeliver compared to what the market expects, or compared to what their message is in terms of the dot plot and how many hikes they expect to deliver, particularly if we start to see inflation come off the boil quicker than we'd previously thought. Now, obviously, we're going to have, as we move into Q2 next year, we're going to have this issue with base effects again. This year, they were pushing inflation higher. Next year, they're going to be dragging headline inflation lower. It's always going to work in the opposite way. And if that means the Fed kind of back away away from their hawkish stance, then that does pose a risk to the dollar. But I think that's probably unlikely. If you look at what they've said recently, they want to get the taper over and done with as quickly as they can and start normalizing policy as quickly as they can. But I think just more broadly, if we look at what's going on in fixed income, if you look at how flat the yield curve is and that bear flattening that we've seen recently, where front end yields have just been on a tear higher, long end yields have been on a tear lower, it's a very, very interesting position where we've got a Fed hiking into a very flat yield curve with the market almost saying, this is a policy mistake. You're going to choke off longer run growth if you do this.
Yeah.
And I don't think that's a risk to the dollar in 2022. But I think longer out, maybe into the start of 2023, that is something that I think market participants are increasingly going to have to put on their radar.
All right. Well, thanks, Michael. I appreciate that. Maybe it'll subside my bullishness in the dollar near term. We have a couple other central banks like the Swiss National Bank, the Norges Bank. Anything jump out for those two central banks and the Bank of Japan and Banxico for that matter? Anything that jumps out with those other central banks that are meeting for the remainder of this week that you wanted to?
Yeah, we do indeed. It's a ridiculously busy end to the year, isn't it? Everything's kind of being crammed into the last week or the last couple of days of the last week. Just to go through them very quickly, I mean, the Swiss National Bank are obviously not going to tinker with policy. They're probably the most dovish G10 central bank by quite a long way. But I think it will be interesting if anyone does trade the Swiss franc to see what the SNB have to say around their idea of the valuation of the Swissy. Euro Swissy trades comfortably below 105 now, which is, I think, the lowest level since around about 2016, 2015. Forgive me, I haven't got a chart in front of me at the moment. And 105 has previously been a bit of a line in the sand for the SNB in terms of where they see a level at which they might look to either jawbone or actually intervene monetarily in the market. So I think it'd be interesting to see whether we get any comments around how highly valued the Swiss franc is. In terms of the Norges Bank, they're probably going to hike rates by another 25 basis points, we would expect. Still at the front of the queue when it comes to G10 central banks and policy tightening. And actually, they're probably going to indicate a relatively hawkish rate path for next year, which should support the NOK as well. And then lastly, the BOJ. Well, it's the BOJ. They're obviously going to be pretty dovish, obviously going to be pretty cautious and giving us absolutely no reason to buy the yen, which I think I looked the other day. The yen's down about 9% against the dollar already this year. And it's tough to see that tide turning as we look ahead to next year as well.
Yeah, I think the technical is at 112.50 or it was a previous resistance, big support, hasn't been able to breach that. So it's going to be interesting to see if we can continue to maintain those gains. And just going back to the Euro Swiss, we are at levels. You are correct. We are at levels we have not seen since 2015. I don't know about you, Michael, but me personally, and I'm not sure how you advise your clients. Buying Swiss francs is not my cup of tea. I'd rather be on the short side of the Swiss francs because you never know when the Swiss National Bank's going to shove that trade right up your where the sun doesn't shine.
Yeah, but, I wouldn't want to touch the damn thing with a barge pole, to be honest with you.
All right, well, that's maybe some great advice that you give your institutional clients, and for those of us that are retail more oriented, I think that's some great advice as well. So let me ask you this: what does Canton FX do, and how do we find out more about what you do?
Yeah, of course. So Caxton do international payments, cross-border payments for both businesses and consumers. So we're not involved in the speculative side of things. We're much more on the deliverable side of the market. And our website is caxtonfx.com. So if anyone does want to find out any more information, then they can head over there. And if they go to the analysis section, then there'll be a little pretty picture of me and all the stuff I write as well.
Awesome. And I'm sorry, I said Canton, I meant Caxton. But that was my enunciation.
Absolutely fine.
Problem. Sorry about that. But Michael, I want to say Happy New Year, happy holidays. I hope you have a safe and wonderful holiday season with your family. I look forward to speaking with you early of next year, and maybe I can get your views. Maybe they've changed, maybe they haven't. Maybe pigs started flying. It's going to be interesting to hear from you at the beginning of next year.
Definitely. Well, thank you very much for having me once again, Blake. Merry Christmas and a Happy New Year to you and the family as well. Take care.
Take care.
Cheers.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.